Okay, so to go over the answer to the Power Strategy 1 question on the previous page, let's take a look at the chart in question. So we've got this chart here. We know it's a Power Strategy 1 trade. So we know that the C to D leg is going to be agreeing with the general trend of the chart. So pause the video now and identify the trade. Did you find it? The ABCD is as shown. The C to D leg is agreeing with the general trend of the chart, which is up. And so we're going to be taking a long trade here. Where would you enter? Well, you're going to be entering at the 25% mark from point C. The 25% mark of A to B from point C is about this portion here. We've adjusted the price slightly so you can read the price off the vertical grid more easily for the question about how many currency units you're going to be trading. What about your stop? Where would you be placing the stop? Well, you're going to be placing the stop below point C. And again, we've put it on the grid line so you know exactly which price we're going to be putting our stop on. And what about break even? Well, the break even point is at the 1-to-1 risk reward. You know this by now. So what we're doing is, again, we've adjusted the stop and entry slightly so it's on the grid lines. But if they were at the precise place that they're supposed to be going, then the break even point would be as shown. So the distance between the entry and the stop is supposed to be equal to the distance between the entry and the break-even price. Here they're slightly off because we're trying to put the entry and the stop on the grid lines, as I've already explained to you. So how many currency units would you trade? We know the chart's US dollar against Japanese yen. We know we've got a $20,000 account that we want to risk 3% on. We know the entry is 104.84 and the stop is 104.43. So let's use the trade size calculator. So we've got a $20,000 account, 3% risk on each trade. So US dollar against Japanese yen. Entry price is 104.84. And the stop price is 104.43. When you click calculate, we get 153,424 units. So for this trade, we should be trading 153,424 currency units. What about the exit? Well, we know with strategy 1 trades that we should be exiting at the D point. So we buy because we're going long and we sell to exit the trade. And our risk reward? Well, we don't really need to think too much about risk reward for a strategy 1 trade. We know the 25% is fixed. The C point where the stop is going to be going around is fixed. And the D point, the 100% mark, is fixed as well. So for strategy 1 trades, we are getting a 3-to-1 risk reward. So I'm sure you got that right. Let's go on straight through to the next question. So go over to the next page for the next trade example.